Multi-generational home purchases on the rise. There's an old country song called Meet in the Middle, and it's about two lovers choosing to walk to meet under a tree because they live 700 fence posts apart. And there are a lot of compromises, teamwork, and creativity happening in the housing market right now because affordability in many places is so prohibitive. So we're seeing a lot of families combine forces to make home buying a reality right now. And there's anecdotal evidence of this from my own life. I have a friend who is a home builder, and he's mentioned that he's seeing a lot of this also with some homes that he's building. Uh, he's seeing it in his own family. They're not buying a home together, but he is hosting his daughter and her husband and their new baby. So this is an example of young people just moving in, not necessarily purchasing a home, but definitely needing um, to just live with family right now. And another example is that I have a former colleague who I haven't seen in a couple of years, but when we worked together, she and her son and his wife were buying a house together, and they were having one built. It was a new build, and I remember her talking about them going out to the site every week to make sure that the house is being built correctly, which is really smart. That's some good advice to take if anyone is having a new build done and you're within in any kind of proximity to the house. Visit it frequently. Make sure that they are building it to standard. There are some nightmare stories of new builds falling apart like houses of cards. I mean, there are videos that you can watch that show these houses just being blown over by the wind, literally. It's like these builders have never done it before. Like they're just fly-by-night operations, not putting 45-degree angle pieces in the right angles of the walls, and these things just collapse with the first wind. So that was really smart of her. I digress. And another story about this is for two friends of mine. They have a couple kids, and her mother moved from California because it was just getting so expensive to live there. She sold her home, and they pulled her equity, and they use all of their credit and his income. And I think she has some social security also. And so she's there to help out with the kids. And I believe it was a two-story, so they were able to basically make the bottom part of the house her apartment. So that works out really well, and it just creates good boundaries for everyone. So no one steps on anyone's toes. Everyone has some place to go at the end of the day, and they can all benefit financially from teaming up. And the fourth story is that my parents' friend, a gal their age, her daughter and her husband have 5 kids, and they want to live in the country. So they are combining forces. They're using her equity on her house and his income and her social security income. And they're combining forces, and they're buying a house in the country. They're having to compromise a little bit. They want to live on 35 acres way out in the country, but she's decided that that's a little too far for her because she may need better access to medical services as she gets older, because they're going to plan on having this house for a long time. This will probably be the last house that she ever lives in, and they may be providing long-term care for her in this house as a reciprocity that she's giving by helping to watch the kids. And that reciprocity is a big element of families moving in together, is that everyone is getting something out of the partnership, not just financially, but lifestyle wise also. It may be allowing the the mom, if she's a stay-at-home mom, to just get a break, just get some reprieve, and get out and do her own thing. If the grandmother, the grandparents are there, and then when the older generation starts finally needing more care, they'll already be living in the same house, and the middle generation can provide care for their parents. And so this is a really optimal living situation for a lot of people. Not for everyone, but more and more people are seeing the benefit of living this way. And there's an article that I'd like to share a little bit from. Fortune Builders CEO Than Merrill says that living with extended family has become more common today than at any point in history. And there are 5 ways that you can buy a house with your family members. And the easiest way is to buy with cash. You can pool your money and purchase in one name or multiple names. And although having this amount of cash can be really difficult for some families, um, it is possible if the elder family member has a house that they want to sell, get the equity out of, like the 2 families that I gave an example of. If there is an elder family member who can foresee themselves needing long-term care at some point, and the kids are willing to give that long-term care, then that's a good situation. You can get your CNA. I forget what the acronym stands for, but it's not a whole lot of schooling. Uh, maybe it's sometimes you can do a learn at your own pace online. You can get your CNA, and then you can get hired through a CNA agency, like a home health nurse agency, and you can be paid to take care of your own family member if they are qualified for home assistance through that agency and through the state. So that is something that if anyone is interested in living multi-generationally, should really look into, because you actually get paid to take care of your own family member, which I think is perfect. I think you're adding economic value to the system by taking care of an elderly person, and it just so happens to be your own elderly person, right? Elderly people, I think, what they least want to be in the world is a burden, but too often they do become that because they need care, and they're too old to work, and they need to be taken care of, right? Those roles switch as we get older. You kind of become the kid again. You kind of become the dependent, and you can depend on your kids who are middle aged who have their CNA, and they can make money to pay the bills, to pay for household items. So this is kind of a genius way to thread that needle and take care of your parents while making ends meet. The second way to buy a home with family members is to buy as co-borrowers. Both parties will have to be listed on the application, but it's possible to have only certain people's names on the deed. This depends on the situation, the health of the individuals, and the quality of relationship is really important for this one. So the catch in this situation, and it's not really a catch, it's just something that you should be aware of. It goes back to making sure that the quality of your relationship with the person you're buying a home with is good, and that you can trust that person, because you can be buying as co-borrowers, and whoever is the co-borrower is on the hook for the mortgage. So if the primary borrower stops paying and it goes into default or foreclosure, that will hit your credit as a co-borrower. So make sure that whoever you're being a co-borrower for is good and reliable, and they have just good morals, good integrity, good ethics, make sure you have a good relationship with them. Make sure that they're not gonna put you in a bad situation. So this is a viable and a great way to buy a home. Just make sure that the quality of your relationship is good and that you know that the borrower for whom you are being a co-borrower for is in a reliable and stable financial situation. The third way to buy a house is to purchase with a co-signer. And the difference between this and co-borrowing is that the co-signer has no rights to the property. So as a co-borrower, you would have rights to the equity. If you sold the house, for example, the co-borrower would get the amount of equity in proportion to the down payment that they put down. In this situation, as a co-signer, you don't have rights to the equity. But the other thing is that the co-signer will still be on the hook for making payments if the buyer can't pay. I would think twice before putting myself in this situation. I would definitely want to be a co-borrower. And if you would like to hear a personal story from me about this kind of situation with co-borrowing, you can check out my video called The Nightmare Rental Property, in which I had to learn the hard way with a wholesaler who I would never recommend you sell to. Never sell to any wholesaler. You can buy from wholesalers safely, but I recommend that you never sell to a wholesaler because it puts you in a very vulnerable position if the end buyer doesn't hold up their end of the bargain and comply with the terms. It can destroy your credit and your financial life. I know from experience. And the fourth way to buy a house with family members is to have a family member provide gift funds. And gifting cash to your family member can help them qualify for a bigger home loan without making both parent and child legally obligated to the mortgage. It's basically just one family member giving another family member a gift of cash. And an article from Mortgage Reports tell the story of one such family who bought a house this way. Leslie Sherman, a 33-year-old couples therapist, and her husband, Conrad Olsedinger, I might have messed that name up, that's a tough one, aged 30, a dance academy director, live in San Jose, California. We didn't have plans to buy a place because it was not going to be financially feasible for us, she says, so we are going to rent indefinitely. That's when Mom and Dad stepped in. In February, Kathy and her husband, Michael Sherman, helped Leslie and her husband close on an $850,000 condo. All four of their names are on the deed. Leslie and her spouse own 25% of the property, while Kathy and Michael own 75%. And in a new study by Intuit and Credit Karma, 38% of Gen Z homeowners say they received financial assistance from their parents to buy a home. Even with zero down payment programs, high home prices and interest rates can put buying a home out of reach without help. But there is rationale behind this, and it's actually pretty smart if you have the means to do it. And I completely understand why people are buying homes this way if they have the means to do it. The Shermans helped both of their kids purchase their first home and see the money they'd invest as an advance on the inheritance they'd give their kids. And this is actually really smart because if you have assets in an estate and you die, and even if you have a will, sometimes if your children or the beneficiaries of your estate don't have a good relationship, they can get into a big battle, a war. Wars happen over estates because there's so much at stake. And this can all be avoided if the benefactors just give it away before they pass on. They divide up their assets right there. They give a down payment to this family, they give a down payment to this kid for this house, a down payment to this kid for this house. And so that when they finally pass on, they have next to nothing in their name. It's like pennies, and it's not even worth fighting over. So this is a really smart way to divide your estate before you pass on. You avoid any kind of family feud between family members who may be greedy, or they've felt ripped off, or like they weren't the favorite in the family. This is really smart. So actually, the Shermans were pretty smart giving their kids down payments on their homes. And the fifth way to buy a house with your family is the gift of equity. And this one's a little more complicated. But this is different from a down payment because it involves a transaction where one family member sells their current home to another family member. And this has incredible benefit because the parent can sell their property to the children for under market value. And then their extra home equity, whatever was left from the appraisal amount, can act as a down payment for the child. So the bank will just credit that equity to the child as cash up front, which is brilliant. It's a really great way to help your kids out and help them buy a house. So these are 5 really creative ways to help family members just live a higher quality of life in a better, bigger house. Probably if you're all combining forces and pooling assets, it's a really smart way to do it if you can stand living with your family members. I know there are some people who could not live with their parents, and there are some parents who couldn't live with their kids because their lifestyles are completely different. Their personalities are totally different. One person is a musician and they're jamming on their drums or their guitar or their tuba or accordion all the time at 1 in the morning because they feel creative, and the other person is sleeping because they have to get up and work in the morning. So for some people, even though it may work financially, the lifestyles would just clash too much and it wouldn't work. But if you're able to make some kind of compromises, this is an awesome way to buy a house these days. So while a lot of people think that multi-gen living is a great way to buy a home in the current market, a lot of people will be forced or choose to wait it out for various reasons. And this will require home prices to come down and incomes to come up, which in many ways is the more difficult variable to control, since employers are largely in control of this, unless you want to quit your job and go somewhere else and get paid more. But doing that right now is difficult because of the job market. Employers are actually paying less right now if you switch jobs. So the best tactic to use is to probably negotiate a pay raise if you can demonstrate your value to your current employer. But as far as I can see, the only way for buyers and sellers to gain a lot is to give a little and meet together underneath that old Georgia pine. So thanks for watching. Remember to like, subscribe, comment below, and don't give up when you can get ahead.